See the global economy doing better in a recovery, or is it starting to accelerate in a decline type of mode?
Well, I don't really think anyone is saying the economy is doing well anymore. The Fed just has, even the Fed itself, the king cheerleader, has kind of modified its language to say we expect things to get better, as opposed to they are better, because they're not. In fact, I wrote, God, 3 months ago, an article called "The Worst Global Economy of Our Lifetimes." I mean, that was 3 months ago.
Mm.
You know what today's article was called? "The Worst Global GDP Recession in 50 Years," because there's unquestionably going back 3 months or more even. We're talking about, plunging commodity prices. Right now, as we speak, the CRB index is at a 40-year low. The Baltic Dry Index, the Chinese Containerized Freight Index, these are at all-time lows. Junk bonds are collapsing to levels from 2008. Pretty much every U.S. economic data piece is negative right now. Retail sales, industrial production, factory orders, all that stuff. And that's the U.S. Overseas, it's much worse right now, particularly because the surging dollar is causing currencies to collapse, which is why the average global currency is at or near its all-time low. So in dollar terms, when you translate the GDP output for all these other countries into dollars, this is the lowest we've had since like 1965 for the world. Lower than 2008 even, because the dollar is much stronger and these currencies are much lower right now. So it's really, at this point, I don't even really think too many people are even paying attention to Wall Street anymore. They've been wrong about so many things for so long. And as for the GDP or the economy being recovering, I mean, it's laughable. The only thing that's recovered is the quote unemployment rate, but the real unemployment rates are surging. They're at, depression era levels. I mean, there's a reason why back in December of 2012, when the unemployment rate, the so-called unemployment rate, was 7.7%, the Fed said we're gonna raise rates when it gets to 6.5%. Well, it got to 6.5% in April of 2014, meaning almost 2 years ago. But then they said, no, we're not going to raise rates because of this. Because the labor participation, other factors are making it not realistic. Well, here we are at 5% 2 years later, except labor participation is at a 40-year low and real wages are at a 40-year low and all the jobs, manufacturing sector is in a recession. So again, I think everyone knows the economy is doing poorly. And of course, if the Fed is crazy enough to raise rates with a collapsing economy and a surging dollar, and all record high valuations of financial markets, then, they're going to, make things dramatically worse.
What do you think is going to happen now with the Fed? I mean, this week they're looking at, the entire economy and they're going to make their decision. And so far, since the crisis, we've had, 7 years of 0%. And if they don't raise interest rates, how is everyone going to look at them? And if they do raise interest rates, what is going to be the effect on the economy?
Well, put it this way, back in August, I said that the upcoming financial big bang to end all big bangs would be when the Chinese start to devalue the yuan. And sure enough, they did it the next day, and they've continued to do it. In fact, they've done it pretty much every day since they were accepted into this strategic currency basket. I then wrote afterward, the only financial event that would be more cataclysmic or as cataclysmic as a devaluation of the yuan would be if the Fed raised interest rates. And, there's no doubt, it's exactly as you said, they've given up on the concept of the economy is doing well, so we're going to raise rates. And if you listen to what Janet Yellen is saying, she's saying, now, well, we expect that the economy will improve, so we're considering raising rates, because they can't be stupid enough to say the economy is improving. I mean, we may well have a recessionary GDP print this quarter. So what are they going to do? I think they're going to raise rates. Up until this point, I thought it was in doubt, because the only thing the Fed cares about, they don't care about you said they're looking at the economy. No, they're not. The only thing they care about is financial markets. It's always been the case. It will always be the case forever. And the fact that since this latest propaganda scheme, as I call it, the December rate hike or bust, started in October, the economy has gotten far worse. All the numbers have gotten worse around the world. The commodity index has fallen an additional 10%. The Baltic index at an all-time low. All the BRICS currencies are collapsing. This is since late October when they started this whole hints of a December rate hike. So clearly they're not data dependent anymore, as they used to say. As you say, it's all about credibility, because remember, they ended QE, or they ended it overtly in October of last year. There's not a question in my mind that they've been covertly doing everything as much as they were doing it overtly then, because look at how stock markets trade, bond markets trade amidst the worst fundamentals imaginable. But that said, it's now more than a year since they ended QE and said that they were going to start raising rates. They said that, in fact, she initially said it, they were going to raise rates in March. That's what she said last December. She also said last December that the oil price decline is transitory and export price decline is transitory. And meanwhile, the commodity index is down, 30 or 40% since then, and it's not going back up anytime soon. So again, it's gotten to the point where they have to do it from a credibility standpoint, because they know at some point, look, we're in the final currency war. Every central bank in the world is in massive QE mode right now, from the PBOC to the Bank of Japan. Now the ECB is going berserk. And, so they know if they don't do it now, everyone's going to just assume that they're just going to join the boat. So they've been desperately trying to support stock markets, to make it, look like they have the cushion and the support for it. But at the same time, pretty much all the other things have fallen apart. Now you have the high yield bond markets collapsing, and you have the commodity market collapsing, and currencies are collapsing, et cetera. So there's not much left. I mean, they're really on thin ice right here, with this, they're in a Hobson's choice, because as you said, if they do it, they risk really crushing an economy that's already collapsing. And if they don't do it, everyone's going to assume that they were lying all along, that they intend to be ZERP to infinity. And eventually they'll have to go back to ZERP to infinity, because if they do this, forgetting what may happen the very minute it happens, it's only going to put more pressure on commodity prices and global currencies, which is only going to make things worse.
Now, you mentioned throughout this whole thing that the Baltic Dry Index is continually falling. And today it hit 484.
Well, I didn't even see that. So it blew below its record low today. Okay.
Yeah, today it's much, much lower. I mean, what do you make of this? I mean, this is just crazy at this time of year.
That's right. The seasonally weak period for the Baltic, it's a very seasonal index, is the first quarter. So the fact that we're hitting all-time lows in the non-seasonal index, non-seasonal time of year, should tell you. And it's not just this. It's pretty much every instance of global trade, every tool that's there to measure it is telling you that. Everyone's in recession right now. A couple of them lying about it. In fact, in China today, we found out that a bunch of the provinces have been lying for years. They overstated it and they admitted it. So again, the Fed is not looking at the global economy. Think about it. Back in September, remember in September, they didn't raise rates and they said, we're worried about the global economy. That's why we're not raising. Well, a month later, the global economy was a lot worse, but they took that language out. So it makes no sense at all, other than that they made a concerted effort. To me, they said, look, we have to raise rates. The only way we're not going to do it is if the markets collapse right in front of us. And even if they fall a lot, and there's been a lot of market declines. In fact, the average market around the world is falling right now. But they figure as long as we can keep the Dow up, keep gold down, keep interest rates relatively stable, we'll try this with all of our market manipulating tools going on behind the scenes, just so we can say we did it. But the fact is, it has no economic impact. I mean, it's all bad. I mean, raising rates with record high debt and collapsing economic activity can only be bad. And when you have record high equity and fixed income valuations, that hurts too. But they figured they'll try to get away with it, and I don't think they will, because I think there's too many moving parts around the world that are going to respond negatively to it. And my guess is they'll raise it, and they'll immediately it'll be like they'll get the dollar to go down. Everyone will say, "Oh, it was a sell the rumor," and they'll buy stocks. The PPT, and say, "See, everyone was anticipating it's no big deal." But you'll see it won't take long before the same terrifying things take over. I mean, you look at today here. They got the Dow up 200 points. Yesterday, it was down to 150. They raced it. They ran it back up at the end of the day to prep for this hike. Remember, 80% of all the S&P's gains for the last 15 years have come on the day of FOMC meetings and the day before. So this is what they do. But look at the base metal prices today while they're goosing stocks. They're utterly collapsing. Yesterday, they had this big oil PPT rally, and still the CRB index fell. And today, the same thing. And still, the CRB index is going to fall again. the reality of the global economy is swamping them. And by raising rates, there is nothing good that can come of this, other than, reduced demand for reduced economic activity and reduced demand for financial securities that are in large part valued on record low interest rates.
I mean, do you think, I mean, right now, what is gold is at like 1,060 right now. Do you think gold is going to go even lower than this?
Well, they can try. At
Because I
this
remember when it
point,
was at like 1,200, people were like, oh no, it can't go past 1,200. Then it was 1,100. Now we're at 1,060. I mean, they're continually suppressing this to make us believe that, you don't need gold. The dollar's good.
well, look,
Go to the stock market.
unlike the stock market, which can be hyperinflated. I mean, look at Venezuela. It's the best performing stock market in the whole world. And they were in a hyperinflation right now. But unlike that, you can't do, the physical gold market underlies it. And right now, the result of what they've done is that we have record high demand. Unquestionably, 2015 will be the record demand, driven, as you can imagine, by the East. And of course, all these other people around the world who are desperate to get into precious metals because their currencies are collapsing, which is why in other currencies, gold is doing just fine. And at the same time, you have vanishing inventories, the COMEX inventory, the GLD inventory, probably behind the scenes, the central bank inventories, like the Germans are not allowed to see their inventory, and we never let ours get audited. And of course, the mining industry can't operate at these levels. I mean, the mining industry, the CEOs will tell you, the Rand Gold guy just said half of all the mines are uneconomic, primary gold mines. And I would say for silver, it's even more so. And again, with silver, you have half of all the silver is the byproduct of copper, lead, and zinc mines, which are so oversupplied that they're going to be shutting them down en masse. And that's why companies like Glencore are going to go bankrupt. So, you're going to see massive drops in production in the coming years because of what they've done. Even if prices jump up right now, there's been no exploration out there. So, you're talking about falling supply, and they're just starting the money printing. So, monetary demand is going to pick up. And there's not much inventory out there. So, can they make it go lower? I don't know if they're crazy, because they're only going to exacerbate this. Remember, we had a major silver shortage just a few months ago. It was probably the second biggest shortage we had since the 2008 crisis, where we ran out industry-wide. So I think they're setting themselves up by doing this, unless they have some grand scheme for significant shortages, if they push this envelope much further.
The yuan was given the green light to be included in the basket of SDRs. Do you see this having a huge effect on the U.S. economy, the dollar? What's your take on this?
No, well, none at all, actually. I've said all along, I think it's meaningless. It's more PR for China than anything, just to say, hey, we're included, but they don't care. I've said all along, it also will have no impact on what they do about announcing their gold. In fact, when they announced that comical 1,600 tons back in July, no doubt they did it just to show the SDR people, the IMF, yeah, look, we have gold. But, they probably have 10 times that amount. They may have more than 10 times. They're just trying to show that we have some backing. And by the way, they've since added every month. They're up to like 1,800, which doesn't sound like a lot. But given that the COMEX only has 4 tons and they're adding 20 tons a month, just to that one bucket, the official the PBOC reserves, it shows you that the world is the people that were ignoring the fact are now realize that they have gold. But the fact is, they only really wanted to be in from a PR perspective. And the fact is, as I said earlier, since they were accepted, this is November 30th, they've devalued the yuan every day. So clearly they are thumbing their nose at the IMF, who just accepted them for being, the stable currency, because they've devalued it every day. And it's now below the level from when they devalued it first in August. And I've said all along, this upcoming Big Bang is they're going to devalue it 25%. Because they're just getting their economies collapsing, and all of their other currency peers like the yen are devaluing. So they're going to devalue. And from that aspect, it's going to cause the gold price to soar. But in and of itself, being in the SDR to me is meaningless. I mean, no one's going to ever use this thing. It's a basket of all the currencies no one wants. So who would ever use it?
With oil continually falling, I mean, today it's at 36 and change. Where do you think that's going? Why is oil continually falling at this time?
It's falling because there's massive oversupply. Yeah, I mean, you're talking, before about the Baltic Dry Index, and it's down for two reasons. One is because global trade is grounding to a halt, and the other is because of the massive oversupply of every industrial input imaginable over the past 2 decades, or 3 decades even, because of all the money printing and the Wall Street financial engineering, the derivatives, and all the financing schemes, like putting all these leveraged loans and junk bonds into the hands of high-cost shale oil operators who are all going to go bankrupt. So again, one of the other things they did was they built ships, tankers upon tankers. So you not only have too much oil, you have too much tankers. You now have the Iran sanctions were lifted. OPEC, which, look, I was an oil analyst on Wall Street for 10 years. OPEC used to matter. I left that business 10 years ago. Even 10 years ago, they were starting to lose their luster. Now it's at the point where most of the OPEC producers are full out capacity. So what's the point of even being in the cartel? Because they're not going to change. And the few ones that are there desperately need the money. I mean, the Iran's economy has collapsed because of what we did to them with their sanctions. Saudis has based their economy on $100 oil, their government social spending. So they need the money. Russia, shale oil producers, everyone needs the money. So no one's going to cut. And so, right now you have pretty much record high inventories around the world, and demand is falling. So that's why it's very possible, unless it's hyperinflated, which is a different story completely, that you see $30 oil, $20 oil. Who knows where the bottom is? I mean, we're heading into a very bad situation. But again, it's not just oil. There's a reason why it's the CRB index. In fact, the CRB index is a 40-year low. The oil hasn't even gotten to that level yet because so many other commodities have been oversupplied for the same reasons. And one of them, by the way, is farming. Everyone, a part of the meme of our sectors, you got to have food because it's going to be in shortage. No, actually, I mean, yes, some parts of the world, food's in shortage. But generally speaking, farmers have overproduced, and that's why you're seeing collapsing commodity prices in even the agricultural sector. I mean, look what beef prices are doing. Look at oats, soybean, corn. I mean, these are big sources of income for a lot of farmers out there. And then, of course, you look at everything else. Look at lumber and copper and zinc. Oversupply. And so, I think that you're going to have a deflationary scenario for years to come, which will only cause more money printing.
So how far can the Fed take this? I know I asked you last interview, but here we are, a couple months later, and, if we go back in time to 2008, everyone thought, 2012, 2014, here we are at the end of 2015. How far can they continue this? I mean, there has to be a point where this entire system cannot be sustained and it just completely falls apart. I mean, do you see it coming?
Well, again, the telltale signs are what you're seeing out there. Again, when you're talking about the worst global economy of our lifetimes, the worst dollar GDP depression in 50 years, when you're talking about parabolically surging debt, collapsing commodities and currencies, civil unrest, all these secession movements around the world. I mean, these are the telltale signs that they're ending. In fact, the fact that they are considering raising rates now is in some ways, in my view, kind of the biggest telltale signal, because what they're saying is their credibility as a leading central bank is ended here. I mean, raising rates a quarter is not going to give them credibility. It's just going to prevent them from becoming viewed as an all-out banana republic. Like, okay, you are now officially the Bank of Japan. You've said for years you're going to raise rates. You've said there's a recovery. It's as bad as it can get. And so, if you don't do it now, even though the economy's collapsing, you lose all credibility. And this is the point. They can't push the string anymore. They have to pretend. That's the only thing they have left is pretending that the economy is doing better. But again, you raise rates and you're just inviting more bad things to happen. So how much longer can they do it? I don't know. I mean, heck, even if you look at the commercials on the COMEX at JP Morgan's, they're on the verge of going long gold. I mean, all these things are lining up against, those who are trying to control the economy and markets. And how much longer can they go? I don't know. We'll see.
Let me just say, if they do raise interest rates, I don't know, 25 basis.
And they will if the market stays up like it is today. Unless you have some turnaround, massive crash going into it, they'll do it. I mean, that's all they care about. They were terrified what happened on Friday, and even more, it was yesterday morning, halfway through the day, it was an all-out crash. So they had to reverse that, as they do before every Fed meeting. I mean, as I said, this is 80% of the gains. The fact that they reversed it yesterday and got it going up today means done. They're going to do it. That's all that matters to them.
So do you think if they do raise these rates, that this is kind of a signal that this economy is pretty much done at this point?
Well, it's a signal that the Fed no longer can play its games of bubble finance, as David Stockman calls it, because the market's going to call them on it and say, you guys are, you failed. You've been saying for years you're going to raise rates. It's 8 years. So they no longer can play this game of adding liquidity to the market. And of course, the only thing that supported the market is the liquidity. So yeah, I mean, in many ways, their ability to control things is ending, right? I mean, if they're not adding liquidity to the market and their sole purpose is to add liquidity to the market, they're being marginalized. So now the world is left more to its own vices. So yeah, I mean, this is a big event. And again, they have to do it. They don't want to do it. And they're certainly couching their language, and they're going to say, yeah, well, we're doing it just to show our confidence, and we really are confident, but we're going to be very, very careful and patient going forward. It's not going to be enough. They'll get their short-term reaction, which the PPT is there with them to show the confidence, but there is no confidence. All it does is make things worse. So I do think that's a big picture. When you're already in a collapsing environment around the world, it only makes things worse, and it makes the Fed's ability to control it even less.
So what part of the market do you think is going to, show cracks when they do raise the rates? I mean,
you've seen it. Look, the commodities are hitting a 40-year low. The junk bond market is in free fall. Aside from today, it's had a little bounce. I mean, the junk bond market is down to where it was almost at the bottom of the crisis in 2009. That's a market that's showing cracks. The CRB index is at 40-year low. Oil is $35 a barrel, $36 a barrel. And copper is $2.05 per pound. It was $5 a few years ago. That's the cracks. The commodities, the currencies of the world, all the BRICS, right? They were going to take over the world. Brazilian real, all-time low. Russian ruble, South African rand, Indian rupee. They're all at all-time lows. And the Chinese yuan would be an all-time low if they weren't pegging it. But they're devaluing it because they want to get there. These are all cracks everywhere. The secession movements, the fact that Portugal had this huge political coup last month, that Catalonia, Spain is going to be seceding from Spain. They're the biggest province. It would be like 2 Californias leaving America. The National Front just won those elections in France. They want out of France and they're going to win the presidency. These are the cracks. They're everywhere. The only place you haven't truly seen it is what I call last to go markets. They support the Dow with all their might. They crush gold with all their might because these are widely watched barometers. But you look around the world at other stock markets, at other commodities, at heck, the gold price in other currencies, and you see that they're miserably failing to support this thesis that they're in control.
For my last question, I never really asked you this before, but what do you make of what's going on in the Middle East? I mean, Russia on one side with Syria, the United States being over there, then we have Ukraine, and we see all this being churned up out in that area. I mean, what is your take on it?
My take is it's part and parcel of what happens when economies collapse. You have wars. I mean, for different reasons. Maybe some people there want oil, some people want freedom, some people like ISIS are probably just pissed off because they were created because the Middle East was devastated by other wars. But and Russia is angry because their oil price is down and because they think we've been aggressive and we need to show our presence everywhere. And then, Cameron in Britain does whatever we do. And now the French are mad because of these terrorist attacks. So again, it's sometimes the things you're not even sure exactly what they're fighting about. It's certainly not like Vietnam, where whether it was a good reason or not, everyone knew what we were there for, or World War II. Here it's just like, yeah, everyone is on the verge of World War III for various reasons. I mean, who exactly are we mad at? ISIS, Iraq, Iran, Russia? Who's our enemy over there? Why is Russia there? Because Syria is their friend? Because they hate us? Because they're against ISIS? Again, to me, it's just, this is what happens when economies collapse. You have more and more radical political movements and more military confrontations.
Andy, thank you for being on the X22 Report Spotlight. I really appreciate it. Thank you.
My pleasure, Dave.